Hello everybody, this is John Novak with NextGen, and I wanted to walk you through some of our TradingView indicators slash trading rules. And where you'll find this is in our NextGen software manual. You're going to go to TradingView indicators, and then you're going to have all of the sign up process for this, but you're also going to get a copy of the TradingView plan right here. And this is really what I would like to go through with all of you guys today. So we're going to talk about also NextGen Pro Trader funding at the same time. One of the things that we've done with NextGen Pro Trader funding, which makes it better than most, is that we've gone strictly TradingView as our main trading platform. TradingView has over 100 million users. It's also got no bugs like NinjaTrader, and you just don't have any of the issues so far that we have found that we do when we're running NinjaTrader with our prop firm. In this video, I wanted to go through the TradingView indicators, just a quick overview, and then I wanted to go through, more importantly, how do you make money with it? So we're going to discuss 3 different types of trades. We're going to discuss the trend trade, the high volume area trade, and the momentum trade. And this is more than any trader needs to be successful with our software. We've done this since 1997. We've run a live trading room, chat room since the year 2000. And we've got last 25 years of teaching traders these same trades. So again, while our indicators are new for TradingView, the indicators themselves and the methodologies that we're going to teach you are very time tested, decades worth of time tested. So our T3 trigger lines, and again, there's a video that goes through the indicator basics, but just for terminology, there's small triggers, which are whatever the faster version is, and then there's large triggers, which are the slow versions. And basically this is going to tell us what the momentum of the market is, and when we have a high momentum look, we're going to want to do trades. One of the other indicators that you'll see is we'll have our divergence indicator, and the divergence indicator will plot lines across highs and lows that have divergence, and these tops and bottoms have a tendency to be retested, and they either break really significantly or they fail. So again, we're not going to get too far into this. The other one is one-to-ones. Again, these are the dots, Fibonacci areas on your chart that will also cause support and resistance. And the reason why we're going through these things, again, outer bands and mid bands, because these areas are where the market has a potential to turn. And when the market has a potential to turn, either from a top or a bottom, this is where we would use something like the high volume area trade to get in at the bottom as quickly as possible. And then once the triggers cross over, we'll do some type of momentum or trend trade on our smaller charts. So that's the reason we're kind of going through these things, just so you know where the areas are. Some of you guys buy or lease supply and demand zones. These are basically just major highs and lows that get highlighted by the indicator. You can do this manually yourself, or you can, once a morning, or you can have an indicator that does it, either way. But we've got the automated indicator that we use that will generate support and resistance zones. And then finally, you're going to see the market flow on our 1-minute chart. And there's 2 really significant things that we're going to use with the market flow. The first one is if there's a bottom made and there's a green line, we're going to look to go long at the green line. And if there is a magenta line, that's going to be a good first target for us. So again, we'll buy green lines, we'll sell magenta lines. But we really want to make sure that we've got one of those key Fibonacci support or resistance areas at the top or bottom, either divergences, a divergence retest, a support or resistance zone with one-to-ones, Any combination of multiple support and resistance things are what we're looking for. But short version is we're going to buy the green line when it's the right spot. We're going to sell the magenta line when it's the right spot. And when you look at your complete workspace, we're going to have a 15-minute chart and a 1-minute chart. 15-minute is going to give you the roadmap, the bigger direction, the bigger areas, the bigger targets. And then the smaller chart we're going to use for entry and management fine-tuning. To place an order, there's a couple ways you can place an order. You can right-click on the chart and click trade, and then it'll give you the list of what you can or can't do. If you click, there's a little plus sign. If you hover your mouse over the right edge of the chart, well, you'll be able to place limit orders or stop orders. For me, whenever it's, I'll put limit orders in at places like high volume lines. And then, if it's just a trend trade or something like that, I'll do a market order and I'll just use the buttons, buy and sell buttons. Very, very easy, very simple. And again, the other thing, you can adjust your quantity if you want to do partial exits. And if you want to do partial exits, like if you're short, you want to buy two, short 4, you want to buy 2 at a spot. So that way you can take some profit along the way, and then obviously you'll have your remaining target for the remaining contracts. So very, very simple OCO orders that will really, really give you the opportunity to fine-tune your stops and your targets very, very easily. So one of the key concepts that we're going to be dealing with when you look at the market flow, again, we go back to our trigger lines. Again, one of the things, whenever our large triggers are widening, cross up, and they start to get wider, and our small triggers are going up strongly above these triggers, we're going to have momentum to the upside. And again, this is where it starts, right here where the faster triggers cross the slower triggers. And then when they're both crossed up, that'll be your first buy spot. This will be your second buy spot, and then smaller chart buy spots. And then eventually what happens is you'll get a lot of price action inside or below the large triggers. And this is where things start to weaken. You'll be able to see your smaller triggers cross over quickly. And really, if you're on the wrong side of your small triggers, you're not really going to be doing trades for the most part with momentum. Same thing in the downside. Obviously, if both triggers are crossed down and very much to the downside, you'll have the opportunity to look for short trades until price and the small triggers get inside your large, and that's where momentum starts to die. So that's basically a short version on how we're going to read support and resistance momentum-wise. Now, the other thing, we've been teaching this for a long, long, long time, obviously. If you go into our NinjaTrader 8 indicators, again, it's the same process. We've got an indicator overview. We talk about trend momentum with our trigger lines. We talk about the same termination conditions, support and resistance areas that may cause a potential turn. We talk about entry opportunities. We talk about high probability trend trades at the core of what we do. And again, same thing with TradingView. We're not straying away from anything that we've taught over the years. Trade management, also read through this section. Even though it says it's for NinjaTrader indicators, the same concepts apply on every single market, every single time frame, even when you're doing trading zones. So again, the termination spots, you're going to see this will be the exact same as what we teach in our classroom. So, and we do our classroom based on NinjaTrader and TradingView. So we kind of go back and forth between the two. So for those of you guys who use supply and demand zones, in lieu of Fibonacci, you can use these support and resistance zones. So it just kind of defines where the market's going to turn. And again, we don't want to use a resistance zone while our triggers are in the wrong configuration. We want to wait until the triggers are going down at resistance, and then we start to look for short trades until we get to support. And then same thing in reverse. We don't want to necessarily buy at support, and even though it looks nice in retrospect, but really what we're looking for is for at least the small, faster triggers to get above the large triggers. And this is the spot where we'll start taking our first trades to the long side on the smaller chart. Same thing with one-to-ones. Also a termination where the market may turn, a spot where the market may turn. If you're using support and resistance areas, when you have multiple things like one-to-ones inside of an area, it becomes a very powerful support or resistance area. What I'd like to do is zoom out and let's take a look at the 15-minute chart. This is kind of a bigger picture. And what I wanted to highlight was our divergences. And divergences will plot, and they'll generate a cyan line to the right if it's a low pivot, and it'll plot a magenta line out to the right side if it's a high pivot. And short version is, we're looking for divergence and then the trigger lines to weaken before we start to go the other way. Or divergence and the trigger lines to weaken before we start to take short trades. Same thing in reverse. If we get to support and we're looking for long trades, we want to see the triggers, the small triggers minimum getting going to the upside. You can see the one-to-one stop the market, which is very common. And then it retests and fails, and then back above the triggers, we're going to look for long trades, and then when we get to resistance, we'll stop. And if the triggers roll over, we'll look for shorts, and we'll look for shorts off of areas like this. This is where we would do a high volume area trade for sure to the short side. And again, when we get to support down at the bottom, we have to stop taking short trades and start thinking about the process of how we're going to get into a long trade at support. Now, the smaller chart also has the same concepts that are applied to it. High volume areas, one-to-ones, divergence highs and lows, support and resistance zones. These are all things that could potentially stop the market. You never know if it will or not. But if you do have a termination condition, and again, I just invite you guys to watch our other videos on termination conditions. It just means don't go long anymore. And what you'll find is that in real time, it looks like it's going to be a great long trade. But because of the termination condition, it actually wouldn't be a good long trade. And that's the beauty of what we teach with our support and resistance areas. So again, support and resistance zones. Again, when we reach with price into a zone, we're going to stop taking short trades first, and then ultimately if the triggers start to roll up, we'll take long trades. It keeps us on the right side of the market almost 90% of the time. Market can always do whatever it wants, of course, but when you start to put this together as a complete picture, you start to see things like multiple divergences. Usually when you have multiple divergences in the same area, it's the market telling you that it is trying to make a high. If you go back a little bit, you'll see we have got one-to-ones at a resistance zone. We've got divergence, but the triggers aren't helpful. So it retests the high, and then once the triggers are crossed down, we can take easier short trades. So let's talk about the actual trades themselves. Again, when we're at these key tops and bottoms, support and resistance areas, we want to look for our 1-minute market flow high volume line to generate an entry for us. So there's only 3 rules. You have to have a zone reached on the 15-minute chart, some type of support or resistance that is a termination condition. Number 2, you have to have the 1-minute small triggers at least crossing above or below, crossed up or down. And then number 3, very simply, you're going to buy or sell a pullback to the line. So it's very, very, very simple trade. So again, you have to have your large chart, for example, up at the top, this is a perfect example of what we talk about. 1-to-1s inside of a resistance zone, and then we want to take as quick of a short as we can because we know this is a very, very powerful area. So we're able to get in a little bit early. And it'll look like this on your chart. You'll have the key high top area on your big chart, and then on your smaller chart it's going to take a second, but with a 1 minute chart it takes 10 minutes, 8 to 10 minutes. Your triggers start to roll over, your small triggers, and when your large and small triggers are in the right configuration, you can start thinking about doing short trades. Now, what does a short trade look like? It would look much like this. So again, we've got mid bands, we've got VWAPs, we've got resistance, we've got 1-to-1. There's a lot of reasons why potentially we're going to see a top. So this is what we're looking for. We're taking that great area that we already know on the big chart, and we're saying we want to see a high volume line, which is created from our white paint bars. And again, I've got a detailed market flow section on our NinjaTrader indicators if you'd like to watch that. But for this example, it's very, very simple. When there's a pink line, you're going to sell at it. And you can see this one, I think my brother did this trade. I think this is one of his. But, you can get in maybe even a little closer to the line. He got in a little off of it. Doesn't really matter. And you can see on 2 contracts, he's already taken some off, and he's still up $900. Very, very, very powerful when you put together a large chart with a trigger line and high volume area at the same spot. Very, very powerful. And you'll see, hundreds and hundreds of examples of this, but once you get used to recognizing the zones on the larger chart in conjunction with the zones on the smaller chart, this trigger line rolling, and again, we said this, but just to reiterate, at least one trigger line must be crossed down at the high volume area in order to take that short trade. So you can see this is S&Ps, and you'd be selling 55.46, and you'd probably look to 37 as a profit target. So really quick, very painless 9 S&P points right there, which is $450 for those of you guys that don't know. And we'll do the same thing on the upside. So this is NASDAQ futures. So again, we have a pivot stop out, we have a zone that holds, we have a white paint bar, we have more closes, it creates the green line. As long as we have at least one trigger up, we're going to buy the green line. So you'd be going long at 19,988. And then obviously, it went up 20 plus points already, close to that. So again, very, very fine-tuned entries at exact spots. And then you're also going to see, along the way, if the bottom is really good and you got that first money, let's say you took your money off right here and you're waiting for something to happen. As we start breaking out of our mid-band and our triggers are getting past the zones, you can see we have a new high volume area in the middle of the chart. You can use this one too as long as the triggers say it's okay to do it and you haven't reached an area yet. So you get double benefit, really. You get the benefit of at a bottom or top getting in really quickly for very little risk. And then continuation high volume lines along the way are very, very easy trades for you guys to take advantage of as well. Just that trade alone will make you more money than you need to pass evaluations. But let's add some more on. Trend trades. And again, the rules are the exact same as they are on our NinjaTrader indicators, right? No target has been reached. No areas or terminations on the 1 minute chart, and we're going to wait for a pullback to the mid band, and we're going to buy or sell a close on the correct side. So again, this market made a top, and you can see we had divergence and the market went down. We got below a zone and our trigger lines are going down. So we're looking for any type of short trades we can do here on the smaller chart. And short version is what we're going to be looking for is on the small 1 minute chart, a pullback to our mid band, And then ultimately the entry is going to be a close below the triggers. This one kind of horsed around a little bit beyond the area, but you can see the triggers were quite strong in this scenario. And then once the smaller, faster trigger crossed to the downside, made it a much easier trade to the short side. So again, something to watch. How much momentum are you under or into at the midband? And do you want, if it's too much, do you want to wait for at least one trigger to roll over, and then really makes life a lot easier for you? So something for you to watch. It just depends on the area. So here's another example where, the trigger line momentum at the midband is not strong up at all. In fact, the larger triggers of the two are still crossed down. So this is where some of our clients will be a little bit more assertive, and they'll sell at the midband and resistance area. Now, if you wait for a close below your faster triggers, this will be your entry spot. If you're in a little more assertively, you'll get an extra 7 points out of it. And then ultimately, because of the large chart area and momentum in the triggers, you're going to take very easy trend trades that are going to make a ton of money for you. And we've been doing this 25 years. I'm sure it works. It's been so many years. And again, same thing. When we break out of a support zone, you're going to be doing long trade, long trade, long trade, long trade. This is the last one of the long trades. And again, you can see we pull back to the mid band, close above, and then you've got opportunity. It went up to like 2030, so it went up to here eventually. But again, it's mid band, close above the triggers, you're off to the races. As long as the large chart has very strong trigger lines and you're not yet at a profit target. Now, the other thing, one more trade that you'll be able to do for those of you guys who really like momentum. Again, same rules as trend trades, and you can't reach a target and then take a trade. So you have to have room to your target. Both charts, large and small, must have strong triggers, and then you're going to buy or sell a pullback to any HVA line, 1-to-1s, mid bands, some type of support or resistance area to help you fine tune your entry. So example of this on the large chart. Again, I think it's quite clear that we've got very strong trigger line momentum to the upside here. And then this is where we now have strong trigger line and momentum to the upside on our 1-minute chart. And as these smaller triggers break through the line, you're going to want to buy at the line. And again, momentum trades are great until you start to lose momentum in the trigger lines. So again, you're able to get to break even plus. You're able to put, technically this is, from 108, call it, 2110. It went up 30 or 40 points before it started to lose momentum. So it's a lot of money. And again, the risk on this is very small because you're buying at the support area, and the minute it starts to go up, your stop is right here. So you're only risking 6 or 7 points max to make 30 or 40 points. So it's a really, really nice trade. You'll start to see these on, a lot of your charts at a lot of the areas. Same thing for short. If the large chart's going down really strong, you'll be able to go short. And again, for those of you guys who, again, from our T3.com website, if you go into our resources and you go into our trading guide, you'll find a wealth of information, not only on the TradingView indicators, TradingView tips. This video will be in there as well, but under the NinjaTrader 8 indicator section, termination conditions, trade management, entry opportunities, and then ultimately, if you want to learn a lot more about the market flow, high volume area trades, additional market flow techniques that you can use. And, ultimately, the nice thing about what we do is you can get into our Discord room, and we run a live class every single day, Monday through Friday. And it gives you the opportunity to be able to go in and post your pictures and do a chat. Let me see if I can sneak in on them here. They're done for the day, but you can see that they'll post in their pictures, they'll post in trades. Mark, who's running the class, will discuss what you did right, what you did wrong, and it really help you whether you're using the NinjaTrader version or you're using the TradingView version, or if you're using both. All you have to do is post a picture and we'll give you analysis and we'll give you education to help you out. And again, it's the same thing, whether you're using the NinjaTrader indicators and you're trading off of support or resistance, or you're using the TradingView indicators. So we really look forward to being able to help you make a ton of money. And again, this is more about the trade setup side. Once you get your trade setups down, we want you to go over to the NextGen Pro Trader funding side, and we want you to be able to, go through the evaluations and pick, 25 grand or 50 grand is where most people start. We've got, this is actually changing today. It's July 1st, so we're going to have to change that. But we're right now doing 80% off. We usually do a lot of specials, so watch for those, which makes it very inexpensive for you to simulate and start trading. And again, if you pass the account, so, on a 25K account, you only have to make $1,250 to pass before you lose $1,750. And you have to trade for 5 days. So you have to make, $400 or $500, $200 or $300 a day, and you can pass in 5 days. And then we'll give you the 25 account. And again, all of this is explained in here. And if you want to go through the instructions for the Pro Trader funding side, you can also just click on the instructions button. And much like our NextGen software side, it'll walk you through promotional discounts. It'll tell you how to start an evaluation. There's a video, the rules for the evaluation, basically everything that you can need, the different types of accounts, right? Whether it's a simulated live account or a live account, how to do payouts and withdrawals, what our payout schedule is. So we've got everything there. And again, the first things first, we need to get you to the point where you can make money using our software. And that's why we go through the rules. And we look forward to helping you, and we look forward to seeing you in our live trading class. Have a great day, and thank you for your time.